Welcome to Mortgage Straight Talk, April 22nd. Okay, this is our third episode. Okay, so we're excited to have all of you here today. All right, let's get right to it. So topic number one, let's think about this. FHA guidelines as it relates to current mortgage financing. All right, we're going to start with where are overall guidelines, and let's begin with, of course, FHA. Folks, here's the good news. FHA has not changed its guidance as it relates to FHA mortgage financing. It just hasn't, okay? And that is some really good news. Now, here's what's happened. A huge portion of mortgage lenders, maybe 70%, maybe 80%, have changed their own personal guidelines, meaning of their own institution. Now, we talked about at last week's episode what's called overlay restrictions. Okay, those two words that I happen to believe can change the course of real estate agent productivity between now and the end of 2020. Overlay restrictions. What are they? Well, let's just circle back with them really quickly. Okay, think about this. FHA will allow down to a 580 credit score with 3.5% down. FHA will also allow down to a 500 credit score with 10% down. However, majority of mortgage lenders said, no, we're not going to go down to 580, and we're certainly not going to go down to 500. We're going to implement an overlay restriction and cap at 680 or 660 and so on. Now, here's the good news. We here at CrossCountry Mortgage, we have not implemented any overlays as it relates to FHA whatsoever. So what that simply means is that the buyers that you interact with, okay, if 10 of them wanted or needed FHA financing, which many do in South Florida, we can service all 10. Whereas majority of the lenders would say, hold on here, of the 10, maybe we can do 4 of the 10. Not good odds, because I think we can agree every transaction counts in today's market. And the agent that partners with a lender that has no overlay restrictions on mortgage product will succeed at a high level because they have the ability to service all the buyers. So why do I always harp on FHA? Well, folks, let me be very direct. If we were living in Connecticut, okay, it's a high qualified state. The average credit score is very high. Manhattan, the same. However, South Florida presents its own set of challenges and is considered not necessarily a very high qualified state as it relates to credit score. So what that means is FHA is a major product to the buyer pool, to the buyer segment here in our area. So whether you're on the list side, whether you're on the buy side, you're going to be interacting with that type of buyer. And they're good buyers, by the way. Think about this, folks. When people put down a little less money, they tend to negotiate perhaps not as much. So these are buyers that are qualified buyers. They just have to be with the right lender. So FHA is still a great product. It's a wonderful product, but many lenders are retracting on their own guidelines, which are going to be causing and have caused a lot of mortgage declines thus far. We are on deal number 21 that we have taken over that has been declined days before closing from other mortgage lenders. Deal 21, and that's just little old me. We've estimated that there's going to be about 1,500 declined FHA transactions here in our region for the month of April. Will it be one of your listings? Could it be one of your buyers? Remember, if you get a decline, call us, get a second opinion. Conventional financing. Here's the good news, folks. As we know, Fannie Mae, Freddie Mac controls conventional financing. They too have changed nothing. They haven't changed anything. They haven't changed anything with their guidelines. So in turn, we at CrossCountry, we haven't changed anything. However, a lot of lenders have changed and added overlay restrictions to conventional financing. Just most recently, we all saw that JP Morgan Chase announced that buyers have to put down 20% or more and have a 700 credit score to now obtain financing with Chase. Think about that overlay. That's dramatic. Now, other lenders have other overlay restrictions, maybe not as dramatic, but remember, partnered with us, we don't have those restrictions, so we can service every buyer that you are working with and not saying, well, we can work with 2 of the 10 or 3 of the 10. That's the form of partnership. And that's what's going to really change the course for agents between today and the balance of 2020, because we expect to see these overlay restrictions with many of these lenders for months to come. Jumbo financing. Okay, here's a big one. Jumbo financing has virtually left the building for now. What is jumbo financing? Now remember, this is loan amounts in excess of $511,400. $511,400. So loan amounts in excess of that is jumbo financing. What has happened there? Well, the reality is that the secondary mortgage market, the investors, the people that are investing into buying mortgage-backed securities, they're saying, gosh, we don't know where this economy is going to end. We don't know what's going to happen. So we're going to go ahead and pull our dollars out of that type of investment and take a sideline position. Therefore, the market virtually went illiquid. There's not enough liquidity in the jumbo mortgage space. Now, we at CrossCountry, we still have a jumbo mortgage product. We're probably one of the last Mohicans on this one, literally. What that's going to mean, though, is there are going to be some other restrictions to it because there's one last product. It's going to take us a little bit longer to close, perhaps 35, 45 days, as opposed to what you're used to with our really quick speed and turnaround times. Now, the good news is that on FHA and conventional, we can still close in 7 days when needed and do that in scale form. But on the jumbo side, it's going to take a little bit longer because it's a lot of money that they're lending. So they really want to take a deep dive on that borrower and their position. Furloughed employees. Furloughed employees, they are out. Unfortunately, they are all around. Here's the good news. We at CrossCountry Mortgage will close a transaction for a furloughed employee. What is the requirements? Well, think about this. First and foremost, all we have to do is just verify that the person is, of course, still employed. The second part that we have to verify is an on or before date that they'll go back to work. And usually it's right around the first payment. So let's assume for a second we were closing someone today, or let's say at the end of this month. The employer just simply has to state that, yes, they'll go back to work on or before July 1. Okay, so think about that. It's a huge advantage because we can service those buyers right now that many lenders cannot, because many lenders have taken a hard position with furloughed employees, and their position is the following: no loan. Think about that. It's a strong position. How can we use that to our advantage? And then probably most are saying, well, who's going to buy a house with a furloughed employee, or someone who's being furloughed, I should say? Well, a married couple, perhaps. Perhaps one of the spouses is furloughed and one is still working, but they still want to buy a home. We can still close that transaction. It's a huge advantage in today's marketplace. So furloughed employees.